Oil and the US dollar in focus today. Let's start with the US dollar. Joining us from the CME is Bill Baruch, president of Blue Line Futures. We're seeing more strengthening today, Bill. At what point does this strengthening string stop?
I don't think it's really the non-farm payroll driving it higher. The wages were revised lower. Good revision, though, on job growth. The dollar didn't move much on Friday. There's some Italian drama back into the markets. And then China devalued the yuan by 1%. I mean, you're seeing that yuan weaker against the dollar, and that's hitting commodities. See, the dollar index is showing some signs of this, but you're not going to see the Chinese yuan in the dollar index. So the dollar on a broader basis is strengthening. I do think there is a ceiling here, and I think as well from the Fed speak we've gotten over the past week, their hawkishness really didn't drive the dollar much higher. So I think what they're jawboning is still you're going to see a ceiling here in the dollar.
So given that the bond market is closed today, it's likely to be a little quieter at the CME, but what is grabbing people's attention down there?
Yeah, there's no noise behind me here this morning, but you are seeing the rates. They're taking the headlines. You got the 10-year hit up towards 3.25. I also think there's a ceiling there in that 3.25 area for the 10-year. That's putting pressure on the equity markets. And as U.S. yields start to rise, that's also supporting the dollar. So given the fact that the yields have made the move they did over the past 7 days, I'm actually surprised to see the dollar not have as much of a tailwind as you would think. And that's one of the reasons why I am selling the dollar up here. However, I am cautious given the fact that there is the Italian drama that has pushed the euro lower. You're also seeing German industrial production miss this morning, also weighed on the euro. So you got to look at the factors that are weighing in on that dollar too. And it's not just a matter of the dollar should be lower for this reason, but there's also the pairs that are also going lower themselves and supporting the dollar.
And of course, we get some inflation readings later in the week, PPI and CPI coming out on Wednesday and Thursday. I want to turn to oil now because we've had a lot of news about oil, and yet crude is still trading just under $74 a barrel.
There's a lot of mixed headlines right now. You had a refinery fire. You've also seen Exxon. They shut down a platform. I'm just seeing right before I came up here with Hurricane Michael. That is all work to lift prices this morning. There's also a tremendous amount of support down to that 72, 75, 73 area. The market's bouncing from that as well. But on the mixed side of the headlines, you're hearing Iran say that Saudi Arabia is really digging into their spare capacity to add production. But you're also hearing that Saudi Arabia and Russia want to add production. So what we continue to lean on, the narrative that we like at Blue Line is the fact that spare capacity is going to continue to shrink, and you're going to see higher demand towards the back half of this year or what we're entering right now. And that's going to be a major driver towards $80 in crude oil. I've been bullish for a very long time, and I think dips are buying opportunities. 71.5, if we see that would be a great spot to be a buy.